Good evening, everyone. Merry Christmas. Welcome to Offsetter 24/7. My name is Niharika Valia Bhatnagar, and I'm with you with the area of AFM. Okay, so what are we going to talk about today is uh, accounting and financial management, but I am starting with a very important module, that is Module B. Module B overall is super duper important because there are many chapters from where you get detailed questions in the examination. So it's an absolutely super important chapter. So if you like this particular session, please share this session among your peers. Along with this, what you can do is that after the share this, keep on liking it, and at the same time subscribe to our channel. And Merry Christmas again. So what you can do is after the completion of the class, check out our website or our app for further details regarding our courses as well, as my AFM batch has just started. So you can do a lot of the basic concepts of accounting in these initial classes. So you haven't missed much if you haven't enrolled in the course yet. If you have, then really good. If you haven't, then go ahead and subscribe to our specific course, right? Acha. What is balance sheet equation? Everyone, this is the base of accounting. When I say balance sheet equation, the balance sheet equation is what? The balance sheet equation says that whatever you have in your business, it's because you introduced your money into it, which is called capital. Then what you did was you obviously you needed a lot of things to buy. Then sometimes your money falls short. So you take the money from others as well. So this is the entire money that is invested in the business, be it in the form of capital or liabilities, owners' funds or outsiders' funds. Then this is all used to make up assets. How do we describe assets? Assets can be anything which helps our business to grow further. It can be our cash, it can be our bank balance, bill receivable, debtor, stock in trade, furniture, machinery, building. What are all these? These are something. Assets are those things which helps a business. These are not the things which are sold. These helps the business to grow. Matlab, through this, the business grows to grow. So assets are those things which helps a business to grow. For example, if I talk about a person who sells furniture, furniture is not an asset. It's a pure good for them. That means through the particular thing, they are selling their goods. है ना? So technically, the goods sale is because you have bought raw material, then you converted it into the finished goods, and you bought wood and used it in this. So technically, your wood which is used in this area is covered here. है ना? But now I have a doubt there. If that is raw material, then the computer that he's using to jot down all the important details, the printer that they are using, the computer, the printer, the particular chair table which is he's using for keeping his office intact there. So all these things are included in this now. These are called assets. And when we talk about the capital and liabilities, those capital and liabilities can be said as something which helps the business to grow further. So this is the investors' money and outsiders' money. So the capital is my investment, and we have the reserves and surplus, where reserves and surplus is the savings of the business. Matlab, surplus is the extra money, and this is the saving which is made for a specific purpose or a free purpose. कि ठीक है रख देते हैं. Let's just keep it aside that maybe we'll need it for the building, or maybe we'll just need it on a random basis as well. Surplus is basically whatever income they receive, that is their profit, a part of the profit which the businessman has not taken and is still lying in the business. That's called surplus. Then liabilities can be long term and short term. Same way assets can be long term and short term. So current and non current assets. Non current means the one which is used for more than 1 year, and current means which is used for less than 1 year, which is basically converted into cash within the period of less than 1 year. So cash and bank balance is already included, but these people, bill receivable, debtor, and stock in trade, these three things, they will be in cash to within a period of less than 1 year or one operating cycle, whichever is longer. Then furniture, you use furniture to sit so that your employees can sit. You use machinery so that you can produce more, and then what you do is you have your own buildings through which you are able to work in a better way. So these are all the things that we are looking at. Capital plus liabilities can be something. Capital is your owner funds and liabilities are those money that you are taking from the other people. So bank overdraft is one of them. If I haven't paid the money to someone, it is my outstanding expenses. These 2 points are bills receivable, bills payable as well as outstanding. These are my current liabilities. The liabilities which I'm supposed to pay are called current liabilities. And then we have bank OD. What do you mean by bank OD? If I deposited 10,000 and I withdrew 14,000, that minus 4,000 would be visible as a bank overdraft, right? So this is a non-current. This is actually a current liability too. Bank OD is also current liability. Term loans are non-current liability, right? So these are the entire things that that the balance sheet equation is made up of. Capital plus liabilities is equal to assets. This balance sheet equation is not only called balance sheet equation, it is also called basic accountancy equation or accounting equation. So there are many different names which are given to this balance sheet equation, basic accounting equation or accounting equation. So there are three different names of this particular equation. This lays down the foundation. Acha, here comes the first question. How is net worth defined in context of the business entity? The total value of the assets, the sum of liabilities and assets, claims of owners against the assets or claims of outsiders against the assets. Net worth. Net worth means the worth of the money in the worth of the business in the eyes of the other people there, right? Not in the eyes of the business itself, but in the eyes of other people. Matlab, the business is going to jot down whatever assets they have got, whatever the liabilities they have to pay, and this is where they'll talk about to the world ki dekhiye, I have this much amount of money. So how do we say this is basically the claims of owner against the assets? This means from your total assets, you jot down the total assets and then you remove the outsiders' money. So after the outsiders have taken their money, whatever is left is the assets which belong purely to the equity shareholders. Okay, na? Got it, everyone? So in this case, the scenario changes altogether. Then, according to the concept of accountancy, how are the business and its owners treated? They are considered identical, they are separate and distinct. The business transactions are recorded from the owner's perspective, and owner's claims are not taken into account. What's going to be the answer there? According to the concept of accountancy, how are the business and its owner treated? The business and its owner are treated in such a way where the business is different from the owner. The business and owner are not the same. They are never the same though. Basically, na, business and businessman, they are never treated the same way. This is something which we have studied in the single entity business entity concept as well. That means if the businessman gives money to the business, the money belongs to the business then. That is why it is called capital. The money that business owes to the businessman owes to its owner. And liabilities are the money they owe to other than owner. बहुत basic बात है. This is a very extremely basic point, but this has to be very clear that the business and the businessman are not the same, right? Then they are separate and distinct entities. Next point. What does the balance sheet equation expresses? Assets is equal to liabilities. Assets are equal to claims of the business. Liabilities are claims of the owners, or assets is equal to total claims. When we talk about the balance sheet equation, it says the assets are equal to what? The assets are equal to the money which the business man gives and the money which the outsiders are giving. So overall, the value would be assets is equal to the total claims. Claim of the owner or outsiders. Both are included. So can I say whatever assets we have, be it long term or short term, that means non-current assets plus current assets is because of owner's money. Capital is always long term. So it's a non-current liability portion, or it is actually written as a separate item altogether. So I'll write capital as it is, and then the next point that here is capital plus liabilities. How do we define the liabilities? Current liabilities as well as non-current liabilities. Got the idea, everyone? So this is how we record this portion. Now comes the next point. How can the balance sheet equation be expressed in terms of outside liabilities, capital as well as assets? How do we define it? Outside liabilities is equal to assets minus capital. Capital is equal to outside liabilities minus assets, or capital is equal to assets minus outside liabilities, or assets is equal to capital plus outside liabilities. So if you remember, we have just talked about it. Can I say that, see, this is where they're just playing with it. Let's look at this. Capital plus outside liabilities is equal to assets. Now, can I say the capital is equal to assets minus outside liabilities? So in this case, they have just changed the way through which the formula is written. Nothing else. This is just a change or twist in the formula. Done. Next point, it is capital is equal to assets minus outside liabilities. Now, conversion of loan into equity is change in both assets and liabilities, change in total assets or total liabilities, only, or change in liabilities but total remains the same. Okay, everyone, there was a loan that the owner gave to the business, and this loan was converted into capital. Does this mean the business capital or liabilities, anything was in total, the liabilities are increasing? Total liabilities are still 10 lakh. There was a loan of 2 lakh rupees. There was a capital of 8 lakh rupees. Now, this would be removed and this would be added. Does this mean there is any change in the assets and liabilities? Assets are still there. Liabilities means the money from outsiders. There is a change in the outsiders funds, but the total liabilities does not change. Na? It is still 10 lakh. 8 plus 2, this is 10 and this is 0. So technically we are still having 10 lakh. Only the way of presentation of this particular area has changed. Hai na? There's nothing else that it has changed. So technically, there is a change in liabilities, but the total liabilities remains the same. The problem is that the change is only in terms of classification. What kind of classification are they talking about? The classification of the way the assets and liabilities are shown. For example, under balance sheet equation, what do we have? Our capital plus liabilities is equal to assets. Out of total liabilities, if I remove a few liabilities, liability number 1 is gone, liability number 2 is gone, and it is added here. So if I make minus 10 here and if I make plus 10, overall the assets are still the same. There is no change in the particular area. It's just about reclassification of items. Done, everyone? That's the only thing. Purchase of fixed assets on credit results in change in total assets, change in both assets and liabilities, change in total liabilities or change in liabilities, but total assets remain the same. Purchase of fixed assets on credit. Okay, look at this, everyone. This is my number of assets, which is made up of capital plus liabilities. Now in this case, what am I going to do? The fixed assets are already given, the liabilities are already given. Okay, now this is a cool one. Why am I saying that? Assets are basically of 10,000. I bought a fixed asset, but it is bought on credit. So the cash is not going. Otherwise, what would have happened? If I bought an asset of 10,000, I would have lost cash of the same amount. In this case, the cash is not gone. So there is a liability, a total sum that I have to pay to someone. So technically, the accounting equation is still the same. Debit is equal to credit. LHS is equal to RHS. But the rule is specifying that the liabilities are increasing and the assets are also increasing. You know? But the change is same on both the sides. So in this case, the answer would be change in both the assets and the liabilities. On the asset side, I bought a machine. So there is a plus in assets. But since I haven't paid, so under the liabilities, I've got another set of 10,000 rupees to pay. So technically, what's happening? This portion is still matching, isn't it? Now, repayment of loan results in change in both assets and liabilities, change in total assets only, change in total liabilities only, change in liabilities, but total liabilities remains the same. So now I'm paying a loan. Huh? Okay, now let's find it out. How does this particular thing affect? Repayment of loan, capital plus liabilities is equal to assets. Now the point is repayment of loan. I have paid my loan, so technically minus 10,000 in case of the loan. The loan is going away, but if I am going from the loan, then I'm losing cash as well. How do we pay it? If you remember the journal, it is basically loan to cash. You are losing cash because of the loan. So technically, can I say this 10,000 is going to be removed? So in this case, what is it that I'm going to do is uh, one asset is reduced and the liabilities are also reduced. This is how this particular thing works. Always remember, if you know the journal entries, I've always said this. If you remember the journal entries, everything is a piece of cake. If you do not remember journal entries, then everything is complex for you. Okay, na? That's one of the basic necessities. If you remember that part, everything is a piece of cake. Change in both assets and liabilities. Now, the sale of goods on credit results in change in both assets and liabilities. Achha, now there is capital. You can write it in any of the ways. Matlab, it can be capital plus liabilities is equal to assets or vice versa. Because the particular things remain the same. Sale of goods on credit results in sales of goods on credit. Now I am selling goods. Huh? That means I have got a debtor worth rupees 20,000. But the point is, where is the cash? I haven't received the cash now. So technically, it is basically debtor to what am I losing? I am losing goods. That means there is an income coming up. You know, sales is my annual income. And how do we find the profit or loss? The profit or loss can be stated that income minus expenses will give you profit. And where does the profit go? Ultimately, whatever profit the organization earns, it is directly taken to the capital. So the best way is when you have any income, you add up the income in capital and remove the expenses from capital. Got the idea, everyone? Change in total assets and liabilities, both the sides. But remember, change in assets, but the total assets remain the same. Hmm. Acha, nahi. There's one more point. The presentation has to be different. Let me just show you that part as well. There is this part, the treatment is wrong. There is one more point. This is actually way more complex. Let me tell you. I am losing stock. Actually, na, let me explain that part in a simple manner. I bought goods for rupees 10,000, sold them for 12,000. Technically, this is what has happened. And if I sold it for 12,000, so what will happen? I have got a debtor worth rupees 12,000. Plus, I have got goods. I have got a debtor worth rupees 12,000. And obviously, the cost of the stock is not 12, it is 10. I have made or secured my part of profit. So technically, my debtor is increasing, my stock is decreasing as per its cost. I'm losing the stock now. This is as per the cost and this is as per the sale. Now the difference is of 2,000. Matlab my asset side has increased by 2,000. So technically that 2000 or the income or the profit is a part of capital account. So this is the actual treatment. The one that I've stated that was wrong. So please correct it. The correct treatment is that you have to add the part of profit here. Okay, this is actually the elaborated form. I just gave you a crux of it, but this is the elaborated form of it. Okay, so technically, if I say the total assets remain the same, no, that is not going to be the point. In this case, there is a change in both the assets and liability side. This part is wrong. The answer is actually A. Okay, these kind of questions really helps you a lot in learning what exactly the balance sheet equation is. You buy goods, and obviously when you buy goods, how do you buy goods, everyone? You buy goods and then you pay for it. You lose cash, but if you sell goods, you make a profit or a loss, then that profit or a loss has to be adjusted here. Okay, so very important question, technical question rather. Chali. So that's it for the day, everyone. I hope you were able to get this particular point. If you're looking forward towards more questions, then I'll definitely get more of these questions in the upcoming sessions. But please go ahead and check out our website or our app. At this point of time, the website has got double validity on all our Mahapacks and 81% discount on any kind of courses that you take. Matlab, this is our JIB CIB Mahapack. You take JIB plus CIB, you get double validity, get it for 12 months. Then you get it for 24 months rather than for 12. And you don't have to pay 12,000 there. Just use the code Y541 and you get 80% discount. Okay. So when we talk about this, you get 80% discount under this, and you will be able to get this particular point for 10,499. The original price was 52,000, and then you have got 81% discount and you get it for 10,499 if you use the code Y541. So hurry up and get your Mahapack right away because it is available at double validity. Merry Christmas again, everyone, and thank you so much for being there.